And that was it for me. I'll share my trades with you as well later if we have some time. Hey Randall, just watching the craziness. Yeah, I mean, look at this. Yesterday it kind of gapped up but sold off. Before the close it opened up strong. Today in the morning it gapped up, but for some reason it's selling off. Now it's coming back. You don't know what's going to happen in this market, right? One day it's gapping up, then it stops trending down, it's gapping down, gapping up, gapping down again. I mean, you just don't know what's happening there, right? Red 3-day. Are you red 3 days, Eric? It's fine. I mean, I remember my losing streak, like the most loss I had in a row, it was like 3 or 4 days. I don't really remember, but it's somewhere around that. But it's totally fine. Just keep the loss small. Once you get back to your win streak again, you will make it all back. I mean, it will not be losers every day, right? Just control your losses. Don't keep them big. Keep them small. Try 3 or 4 weeks. I had that when I was in simulator. I mean, I remember like I had a month and a half red days. I had only one green day in like 30 trading days. I was losing hope at that moment. I just felt that it's impossible to trade, and it becomes easier with time. Hey Bitang, had a big red day yesterday low. That's smart decision. Get back to paper trading until you get your confidence back. Hey Edgar. So yeah guys, let's go to the trade review. We'll go through the trades. I'll be reviewing 2 trades maximum for everyone just to save time, because members are coming and they are sharing the trades with us, and if we still have time, I'll go through the rest of the trades I didn't review there, okay? Open the pen right now. Let me hide this thing here. This could be annoying a little bit. And let's see what we have here. So the first trade is for Arthur. Arthur traded JD. A lot of trades right there, Arthur. But I see that most of them were winners. You were trading pullbacks, right? So you took it to the short side and you got stopped out right there for a parabolic reversal, I guess. Had a really tight stop loss. Let me zoom this thing in right there. So guys, look at this. In the pre-market, the market itself, it was pretty strong. This move right here on JD, around a dollar move with no pullback. Then wicks on the up, you went long. Yeah, this was definitely a hard thing to do. Look at this guy's move. This is a huge move right here. More than $1 move with no pullbacks. Another thing, look at this. You are having a daily level right there, or a pre-market level, and every time it's just selling off and closing below it. After the doji, I took it to the long side, and what would be the stop loss right here? You can just simply put a tight stop loss after going to the long side. It's better going into the long side after pullbacks. After a 50% pullback, somewhere right here, if it bounces out of here, somewhere after a 70% pullback right there. I mean, at least something like this, right? Not on the top of the move. This was a little bit of chasing, but it's fine. You realize that this was a wrong play. It was at the top right there. You had actually climactic volume right there at the high of the day, and then you took it to the short side. Look at those selling pressure wicks, selling pressure wicks, selling pressure wicks, and that was smart. It was good that you entered to the short side. This was totally fine. Held on well to your trade. I see that partial, and then look at that, guys. What are we having right here? And why is this entry much better than this entry? What's the pattern right here? Anyone seeing it? Do you take it for a pattern, Arthur, or you just felt it's going to go to the downside? It is sort of a double top. This double top is actually the confirmation. Yes, exactly, Zen. So you're having a reverse ABCD forming right here, not farming. Reverse ABCD pattern. This is the C. But after a huge drop like this, and after it's making higher highs and higher lows, and after engulfing candles, it's tough to get the first leg down. I mean, yes, it's a new low, and this is like A, B, C, D. So theoretically, this is an ABCD pattern, and this entry wouldn't have been bad. But after pullbacks like this, after engulfing bouncing of strong daily levels, it's a little bit risky to get the first leg down. So what do we have here? You can call it a double top. You can call it an M shape right here for a reverse ABCD pattern, and then you're adding in to your short side right there. So I guess short, partial, exited your full position right there. Realize it's still going in your favor. Good confirmation candle on this M shape right here, which is a reverse hammer. You add it to your position to the short side. Partial at the low of the day, not bad. This is smart. Partial at the break of the daily level, which was also good. And here you exited all. Was this a hotkey mistake, or you took a new trade right there? That was a long. So this I would have been careful a little bit about. I mean, I like that you thought about it for a long right here. Me also. I mean, looking at this, I am slightly long biased. I mean, now we are actually analyzing only the 2-minute chart. What do we have in the 5-minute chart and the 15-minute chart? This is the 2-minute chart, 15-minute chart, and 60. Do you use the 5-minute chart, Arthur? Okay, use it. Okay, so look at this. This is not bad idea to start thinking about it for a long side, but it's a little bit early. Why is that? First of all, you're having a reverse ABCD pattern with an M shape. This is a weak pattern, right? Then it's breaking down the support. After the stock is breaking the support, we either expect it to just flash down, or we expect it to pull back to the previous resistance, to the previous support, below which it will act as resistance, and after that work out. If the stock is getting back to the range, that's a bad sign. That's strength sign. It just shows you that the stock is not so weak. But it doesn't mean that we will take it to the long side immediately inside the range. We need to wait a little bit just to see what's going to happen here. Is it going to try to break the lows one more time, and after that it's going to fail, after which we're going to take it to the long side, or maybe we'll have some confirmation candle, or it's going to drop down. So this long I wouldn't have taken it right here. Right here, let me zoom it in actually. Right here, it started looking better on the 2-minute chart. You see this? It tried to drop down one more time, but came back up. One reason why I wouldn't have taken it on this candle right here to the long side is this candle. You're having sort of a reverse hammer on the 2-minute chart, a wick which is showing you selling pressure. So after it gets back into the range, I'm slightly long biased. If I have a confirmation candle, a doji, or a hammer, after which we are forming a new high, I would take it to the long side. Here, yes, we had a new high, but unfortunately this was a reverse hammer which showed me selling pressure, and which is why I would have simply avoided this trade right here. This was not bad. This is a 3-bar setup. What is a 3-bar setup? Huge candle. After that, a doji or a small body candle, and after that, another huge candle. You take it to the long side here. You put your stop loss below the doji or below the wick of the doji, and then just go with the run. So you're having a 3-bar setup, setting up for the break of the low of the day. You took it to the short side. That would be my stop loss maximum. Somewhere around here probably is where I would have put my stop loss at. Take it to the short side. Nice drop, nice partials right there. Let's see what you did after that. Another short. Now this is long and cover. Wait, was this a long position and you sold off after that? So yeah, this long, it was a little bit risky. Why is that? It broke the low of the day. You're having a pivot point right here. You're having a pivot point right here. If you're taking it to the long side, right here, you're getting into the face of the pivot point. You see it? It's actually respecting it. And remember, those pivot points, those levels, they are a range. They are not exact levels. So you're having a level right here, and you're going right into the face of it. I love parabolic reversals, but for taking those parabolic reversals or those reversals, I need to have some room into my direction. I can't get into a pivot point right there. So this level right here, it was a resistance, and it actually respected it. You see, it went into this area right here, and it got respected, and it got you stopped out. So yeah, this was a little bit early to try to get into a long. This candle, no new 2-minute high, right? You are getting in on the way down. Try to avoid getting into a stock to the long side on the way down, even if you are having a level right there. If you are having, let's say, a a huge bid acting as a wall at round number, that's fine. But a daily level alone is not enough. Would you get into a position to the long side somewhere right here only because you're having a hammer? Or maybe only because you're having an increasing volume, or only because you're having view up right there? Definitely no, right? So having a daily level right here doesn't change that. It's just an indicator, similar to that only hammer with no other indicator, similar to an increasing volume with no indicators, and similar to a strong moving average with no other indicators. We need as much indicators supporting the direction we want to take the trade into, not only one, right? Now let's see, nothing right there, and you're trying to get into the long side with no new high again, right? You said it, it's FOMO, so it's fine. And one more time, or two actually times right there, you try to take to the long side again with no confirmations. Now look at this, what do you have right here? You're having a 2-minute chart. Do you have increasing volume right there? Slightly, yes, increasing volume at the last two candles, not climactic, but it's increasing volume. And you are having a hammer at the 2-minute chart. And finally you are catching the right move to the long side. So see, just be patient, don't try to catch a move when it's not ready. This is so close to a pivot point, just avoid it. 1, 2, 3 and 4 trades on the way down, just avoid them, wait for the confirmation. You want to see a setup which is extended from the 9 and the 5, wait for it to get extended from the 9 and the 5. You want to take it now to the long side for a parabolic reversal, wait for the confirmation. If it goes to the 9 and the 5 without giving you the confirmation candles, let's say this close as a red candle, and then the next one starts to go up giving you a bad risk to reward, then just let it go to the 9 and the 5. You'll find something else. You see this setup every day, and it happened today also on CCL. Let me show you that CCL trade. I actually tried CCL once and it failed, and then the next time I didn't catch it. Just look at this. I mean, if you wait and you are patient, you will catch those setups. You see, bleeding down so far from the pivot point right there, extended from the 9 and the 5, a hammer at the low of the day, where you could simply just take it to the long side. This setup, it's happening. Sometimes you'll be missing these trades, but it's fine, right? Here I did try this one, and this wasn't bad. In my opinion, this wasn't bad. Stock dropped down a lot. It dropped around $1.30 with no pullbacks. Made a new one, made a hammer on the 1-minute chart. I took it to the long side. It got me stopped out. Got me stopped out. Why? Because I had a tight stop loss, and I don't regret it. Like on these type of setups, I put my stop loss. Where do I have a circle? Sorry. On these type of setups, the previous 1-minute low candle is my stop loss. I don't give them so much room, and I never use the wicks. When it works, I get a good risk to reward. When it doesn't work, I'm totally fine with it. My problem here is that I didn't continue watching it and I didn't see this hammer, or I would have entered on this one. So yeah, you see the setup actually worked out, but I get stopped out and it's totally fine. Later, if you see it right here, down there, a hammer, you're taking it to the long side after it's breaking up, putting your stop loss at the lows, and it never goes down. See, you don't have to use the wicks. Sometimes it works, sometimes it will not work, but just be patient waiting for the step. You don't need to take it to the long side on each new low right there, trying to catch a reversal there. When I'm having my FOMOs, I'm focusing on the candles, not the level 2, unfortunately. Yeah, you see, but the candles weren't ready as well, right? But it's totally fine. You did well. I see that you actually got your winner on this one. And the best thing is that you actually held on to your winner. It would have been really bad if you finally catch a winner and then start partialing so early. At least on this move right here, the move I see right there, you definitely got back all your losses right there. Nah, not exactly. I mean, I see the risk to reward, it's really good. It is, yes, early, but in terms of risk to reward, it looks good. But yeah, good job. GG, let's see what you did there. Traded AMD, and I see this one. This is a descending triangle or reverse ABCD pattern. You can call it whatever you want. A descending triangle, but it's a little bit ugly for a descending triangle. You're having a buying pressure right here, buying pressure right here, buying pressure right here. But overall, we're having a stock which is below view up and below all the moving averages right there. So this is a good sign. You are having a stock which is downtrending, a stock which actually gapped down right there. You see the daily, this is the open, this is the day's close. So this empty, gap down. No, it gapped up actually. It opened right there, so I'm sorry about this. Gapped up, one sign against you. Good thing it's below all the moving averages and below VWAP. It's starting to form a descending triangle. On the 1 minute chart, the ugly thing, as we said, is that it's having hammers on the 1 minute chart right there. On the 5 minute chart, it's good because most of the wicks are on the upper side. On the upper side, when I see a setup like this, I will not say it's an A+ setup, because on a smaller time frame and on the daily chart you see one direction. On bigger time frames like the 5 minute chart right there, the 15 minute chart, you are seeing another direction. So there are some indicators which are telling you this is long, others telling you this is short. Looking at VWAP, the moving averages, the descending part, lower highs every time, I'm definitely more short bias on this thing. You took it to the short side, get subbed out earlier, took it one more time to the short side, a little bit of an early partial right there, and finally took it to the short side one more time. I really love your entries. Your entries, you don't get in at the lows, you don't get in for the breakout. You are getting in as close as possible to the descending part, as close as possible to the resistance, which is going to give you a really tight stop loss, and which is going to give you a good reward when the trade actually works out. One thing though, you are partialing a little bit too much, right? A little bit early. Like this partial, it was so early right there. This partial, it was literally at the breakout. This is fine. I mean, I would, yes, it is a little bit early, but I see there is a reason to partial right here. You're having a level which it bounced a few times above, and above which it actually closed one time. So to be safe, you had a really small risk on this one and it worked out. Not bad partial right here. Now these two partials, I would have waited for the daily level, because now it finally broke the low of the day. It broke all the pivot points and you have nothing on your way except for those daily levels right there, right? So you could have just simply held on to this one all the way to the daily level, the previous day close, and once you see that it's actually starting to bounce off the moving average on the 5 minute chart, closed as hammer, having another doji after that. This is actually a reversal sign. New 5 minute high, that's where I would actually bail most of my position out. This short right here, it's not bad, but it's also not the best. And why is that? One, you are having a hammer right here, right? So it went all the way to VWAP, tried to form a reverse ABCD pattern, and got immediately bought back up. On the 5 minute chart, bigger upper wick right there. The good thing is that you got in on a new 1 minute low and on a new 5 minute low when the stock was downtrending and when the stock is below all the moving averages and below VWAP. So yes, the trend is in your direction. You got in with the trend, but this candle right here would have made me hesitate, but it's only one candle, right? Look at new 5 minute low, downtrending, new 1 minute low, sort of a double top, second top lower than the first one. This is not a bad entry. This is a good one as well. My problem is that I get subbed out a lot at break even at descent. So look, sometimes we don't, the stock starts working in our favor and we are up 1 hour, maybe 1.5 hours, and once the stock starts coming back up into your direction, you get a little bit shaken out. You are afraid that this 1.5 hour trade will become a -1 hour, which is why you just simply bail on it at break even. But remember, you had a plan before you entered the trade, right? You know that you see this price action right here. You see it's going all the way to VWAP, wicking above it and dropping down. You see it's going to VWAP and it's then breaking down. You see that this is actually the technical level. This is the support area, right? Resistance area right there. And you are taken to the short side. Before you are getting into the trade, you see this. This is your plan. You know that this is the technical level. This is your entry and you know that this is your target. So why bailing in earlier when you got a really good entry and you have a clearly defined resistance area? Before taking the trade, you knew that it might come back all the way back there. That's why you put your stop loss right there. So why bailing on at break even? To bail on at break even, you need to have a reason. And for me, how am I handling that? I need at least 2-3 reasons. Sometimes I'm not following that. I'm not saying that I'm following it 100% of the time, but this is something I'm trying to follow. I need to have 3 reasons which are telling me that I have to exit before my break even, or that I have to exit at my break even point. Let's say stock started working in your favor. came back up, closed as a hammer. Now this is one reason, but closing as a hammer doesn't mean that I need to bail on the trade yet. New 1 minute high after that hammer. Now I'm having 2 reasons. What's the third reason? No third reason, just hold on to my original stop loss. Let's say the stock worked a little bit in my favor, came back up. A little bit in my favor, came back into the range. Now this could be a reason for me to bail. Drop down, came back up. Now it's forming higher lows on the 1 minute chart and it's forming a reverse head and shoulders pattern. 2 reasons to exit. Let's say it's forming a confirmation candle, which is a hammer, or it's starting to get an increasing volume on the way up. 3 reasons to exit, and that's will be enough for me to exit at break even. Right here, you didn't have any reason, right? No hammer, no increasing volume, nothing right there, right? You just simply exited at break even because it touched your break even point. Last trade. Did it get to your break even or no? Right here. Well, if it got to your break even, then it's totally fine. I would have done the same thing. If I take stop to the short side and I start taking partials and it gets back to my break even, I always get stopped out at break even. We can't just hold on to our original stop loss, turning a good winner into a loser or giving some profits back, right? Yes, this is 50% left right there, but these are the rules we are following, right? Is it your rule that you are exiting the rest at break even if it's going back there? Or your rules are telling you to hold on until you see something? Because for me, yeah, you see, so you followed your rules. There is nothing to be sad about. This is actually something to be proud about. Yes, you had a huge position left right there, but you didn't know that this will happen. What if you held on to your original stop loss and you exit the 50%, the rest of the 50% at your original stop loss, giving half R back right there? Now that will be sad. You will be sad that you didn't follow your rule right here, which is telling you to exit at break even, right? So you did nothing wrong right there. Now that's a good thing. Look at this. You see that a lot of time you are getting stopped out at break even and then the stock makes another move. Now that's something for you to do in this weekend or to do today when you are journaling. Go past your trades, look at your entries and look how many times you're getting stopped out at break even when the stock is making a bigger move, or how many times you're getting stopped out at break even and after that the stock goes against you. Try to see the similar things right there. Try to get some signals which are telling you to hold on more for a trade and some signals which are telling you to exit at break even. Make new rules right there and adjust them depending on what you see right there, right? We can't just trade with the same rules every time. For me before, as I told you, my goal was 2 hours, right? But now that I'm getting better entries, tighter stop losses, 2 hours is a little bit bad for me. I am getting average of 4 hours. Why not holding for a bigger move right there? So I changed my rules and instead of partialing at 2 hours, I'm partialing at 3 hours on certain setups, right? That's why we keep journaling. No matter how good you are trading, no matter how consistent you are, you need to keep journaling and to keep changing your rules, considering the condition of the market right there. TC, let's see what you had right there. So TC traded CCL. CCL gapped up. So looking at the gap, I'll be a little bit long biased. That's my first thought right there. I see right here it had sort of a range, but it's not a clear range right there. Today it gapped up above it. So we're having some room right there, right? From here all the way here. Looking at this, I am long biased all the way right there. Or to the body. Looking at this, in the pre-market, it was uptrending and it touched this level right there, after which it started selling off. You got into the short side right there. Short side on the 1 minute chart. So look, this entry right here, it would have just made me a little bit hesitated. I wouldn't have taken it to the short side there. So what was your setup when you took it to the short here? I think was looking for at the volume more. So what's your indication in the volume right here? What were you looking for, or what you wanted to see there? Second and third minute low volume going up. Right here. This and this. Okay, now this is good sign, but remember the first minute after the market opens, most of the time, like the first 1 minute candle, it's big, right after the market opens. So after that, we could just start analyzing the candles and the volume right there. The first is always like so huge, whether it's going to the long side or it's going to the short side, but that's fine. It's good that you analyzed it. You saw that it dropped down with volume, but it was pulling back with low volume. One reason why I wouldn't have taken this to the short side right here is this candle on the 1 minute chart. So I see that the stock actually gapped up, so this is strong sign for me. I see that the stock is starting to get below the moving averages, below VWAP. That's a weak sign for me. On the 1 minute chart, it's selling off and it's getting bought back up, closing almost like a hammer, right? This is a little bit of strength sign for me. And finally, it's making a new 1 minute high. So right here, I will either take it to the long side, but looking at the moving averages and all the resistance above, I will just simply wait and see what it's going to do after that. Now, finally, you're having a new 1 minute low. So this candle right here, after it's rejected this level second time and started selling off, is not bad for taking an entry. Not on the new low. Personally, I wouldn't take it on the new low because this would be like a huge risk right there. A little bit too much for me for CCL. Getting in the middle wasn't bad right there, so I like that entry right here. And the partial was a little bit early. Yes, you're having a daily level right here, but this daily level, it's not respected, right? It got through it one more time, and it's most likely going through it second time. I'm not sure if it respected it a few times before in the pre-market. If yes, then it's fine. If not, I think I would have ignored this daily level right here. We don't need to partial out all the daily levels right there. You see, it's just getting around this level because it just doesn't see it there. This was good. At least you held on nicely into this trade. Another partial, a little bit too much partials, right? But it's fine if you are getting your risk to reward. It's something you will work on. Coming back up, and you're adding to your short. Now that was that long, or you added to your short? A new short. I see that this is working fine for you right there, but this still, for me, it's a little bit risky. I can't take in positions to the short side on the way up or to the long side on the way down, because a lot of time this doesn't work out. And we saw what happened right there on our first trade we reviewed, right? You don't know what's going to happen after that. After all, this stock is actually gapped up and the price action is not really predictable. It's getting back into the range again after it broke down. So this is a little bit of strength sign. You caught it to the short side, closer to these previous levels right there, which is good. Not bad partial. I mean, this is a little bit early. This was decent partial right here, and I think you added one more time and continued partial. The add right here, I wouldn't have added it right here because still, this is a huge candle. This is engulfing. The risk to reward is a little bit tough, but considering your entries, I think your average was still good, so it's fine. Another partial, and was that multiple shorts right there? Yes, a lot of ads right there. So be careful again about doing that. Look at this. This is 4 continuous red candles with no pullbacks, right? We don't add on the way down. We try to add on pullbacks. You might say that this is actually a pullback here on the 1 minute chart, but it's still forming lower lows and lower highs on the 5 minute chart, right? It's already like 4 candles going down. We could expect a pullback at any moment. We just don't know when that's going to happen right there. Work it out for you this time, but be careful about it. And I'm not sure what here. Longs, I think this is the last partial, and then short, and another short, and then get stopped out. Long, so this was a long right here. And what was your stop loss when you took it to the long side right here? That was all out. this was a long right here, a little bit of partials and adds to the long, right? You think you got stopped out? Yeah, I'm not sure this was stopped out. I think this was a long which you have taken. You took a couple of partials, then these are longs again. The last trade was a short and you get stopped out there. Okay, I see that now. This is just a little bit tough right here, a little bit of a late entry. I would have liked this entry if it was a little bit earlier. I took it to the long side here and I got stopped out here. So if you could catch it on the new 1 minute high, and I was watching it after right here, I think after I missed it as well. I missed this entry right here because I stopped watching it, but I saw it right here, and the same thing, I didn't enter it because this is late, right? The stock is more weak than it's strong, so we know that we're not for sure, but we know that this right here, it could be simply a pullback. We can't just simply chase an entry right there and take it to the long side and give it so much room for a stop loss right there or right there, because we need to have a good risk to reward when we are going into the pullback. So this was a little bit late for an entry, and look at this, the partials right here. So this was your reward, and this is kind of the risk if you're having the technical stop loss right there. It wasn't worth it, I think, right there. Now this short right here, it's the same thing you did right there, right? You're going to the short side on the way up with no confirmations yet, and this time it didn't work out. I see that it worked out most of the time. If it's your style, make sure to go through your journal, to go through your trades and see how it works for you. If this thing working more than it's failing for you, and then you might be really good at reading the price action, at reading the volume, and it could be a really good style for you. If not, you could just adjust it a little bit and wait for more confirmations before taking any trades. But I see right here, most of the time it did work for you. It just didn't work out a couple of times, which is really good. So Lenny, let's see what you did right there. So this was your trade right here, and you took mRNA to the long side. Same thing right here. You could see that mRNA is making a move to the upside all the way here, right? This is just already too much move, too big move with no pullbacks. In the 1 minute chart, sort of pullbacks. In the 1 minute chart, I see this sort of double bottom of the second top, but higher than the first one, buying weak pressure, and you took it to the long side on a new 1 minute high. The 5 minute chart though, let me zoom in the 5 minute chart. The 5 minute chart though wasn't that perfect, right? It's around 60 or 70 cents far from VWAP. This is the doji, which is an indecision candle, and then you're taking it to the long side right below a daily level, which it respected multiple times, right? So not the worst setup looking at the 1 minute chart, but looking at the bigger picture, respected the daily level multiple times. It is so close there, the risk to reward most probably isn't there, right? So if you take it to the long side there and put your stop loss just a little bit below the body, this would be 1-to-1, right? Even if you put it like exactly below the body, this wouldn't be like a 2-to-1, the daily level right there. So the daily level, the 5 minute chart wasn't perfect, the 1 minute chart was looking good, it didn't work out, and you exited at max loss for the trade, which is fine. Good thing you respected your stop loss. What do you have here? I think you had some questions for this one. Would this be a good entry? Where is there? You didn't mark any place right there? At that point, the final point. I personally wouldn't have traded this thing to the long side. Looking at this, why is that? Look at this. First of all, strong move in the pre-market. And remember guys, what I told you, if I see a stock which is making a big move in the pre-market, I don't really love taking it. Yeah, I see this point right here. I don't really love taking this thing to the long side, even if it's up and strong. I would be interested in taking it to the long side only after it makes at least 50% pullback or 60%. I mean, somewhere around that. As long as it's going to the long side, I wouldn't really like it so much. I could see that it did actually break out right there, all the way to the daily level, and then it started chopping around view up, and it chopped around view up for 40 minutes or 30 minutes, somewhere around that. When I see a stock that it's consolidating around view up and it's trying to break it multiple times but it's failing, I don't really, I just get used to that. It usually ends up selling off eventually. Like, it's just chopping around view up, and if it's not breaking up, if it's trying to break up multiple times but eventually just falls out, it simply just goes below view up. Let me see what it actually did. What this stock KNDI, let's see what it did actually. Wait, is it? This was not today. Do you remember the date? Yeah, I think there was a date there. Hit stuff, where was it? Wow, this is actually way back. This 20th of February? Okay, I see that. So yeah, I'm looking at this thing right here. It's just chopping around view up. When it's chopping around view up and trying to break multiple times, eventually I just get used to it that it's just selling off. And there is still no entry signs right there. You are having like sort of an ABCD pattern right here, right? W shape on the 1 minute chart with an possible entry right here. But look at this, it eventually just drops down. But still, even with this ABCD pattern and with this W shape right there, I wouldn't have taken it to the long side. Going against the reverse hammer right there, and because of the move in the pre-market, I'm just not taking it to the long side. Okay, perfect. So let's see what you did there, Noel. Noel shorted AAL. Now that's not a bad short right there. Like, stock was simply dropping down, right? You're having a double top with the second top lower than the first one. New 5 minute high. Selling pressure weak right here. Let me zoom this thing on more. So yeah, selling pressure weak right here, which after it tried to break up, so it had sort of fake breakout, and then you shorted it on a new 1 minute high right there. So this was good. I mean, one thing I would have been worried about is that this was already a huge drop right there, but on the 1 minute chart it looked good. On the 5 minute chart it actually broke the support area right there, which was also a good sign right there. Took it to the short side and a little bit of an early partial, right? So the entry was good. Your stop loss will be somewhere around here, the previous candle. Never using, I mean, personally for me, I'm never using the wicks, and then just try to hold for a 2-to-1 move. See, you took some partials, a partial, and then exited break even. You saw that it rejected view up one more time. Now this was a sort of a pullback right there, at least on the 1 minute chart, where you added to your position. But look at this again, little bit of an early partial. So I like your entries. Your entry right here, it was good. Your entry right here was decent. Yeah, it wasn't bad. This was definitely a little bit late. Yes, it's confirmation. Yes, it broke the low of the day, but this is just too late, right? Look at the 5 minute chart, the entry right there. It's already almost $1 move to the downside with no pullbacks in the 5 minute chart. And on the 1 minute chart, you had sort of a late entry, but it's fine. This entry, it was good. I mean, it wasn't bad. It was at the same range. Early partial, and this is just too late. It's already just dropped too much, and look at that. You are shorting it, you are taking a partial, shorting one more time, and it's just getting you stopped out, right? Then you're shorting it one more time, and this time it worked out. But I'd be careful about this thing. Why? Because you are shorting it on the way up. Like, you shorted it here on the way up and you got stopped out. Then you're shorting it right here. It's good that it worked out, but it could have just simply made a new high and get you stopped out one more time. Right here, the good thing is that at least you shorted it on the way down, but same thing, it's already just too extended in the 5-minute chart for me. You're having a 3-bar setup right here on the 5-minute chart, so yes, this was a setup, but for 3-bar setup, you need your entry to be as close as possible to the low of the doji, with the stop loss at the high of the doji, at least to have a good risk to reward right there. So yeah, I wouldn't have taken this entry. This is at least here it's looking better, but again, it's the same thing. It's just a little bit extended. It's a little bit so far. Better waiting for a pullback, and it will give you a pullback there. So yeah, good job. Garpit, let's see what you had right there. Traded AAL 16th. I can't see the previous price action, unfortunately. This is a 1035 or around 1030 right there. 1030. Okay, this is good. Now I see it here. So you're having sort of a reverse ABCD pattern right there. It's respecting this moving average. It's making a new 5-minute low right there. On the 1-minute chart, you're getting into the short side, almost at a new 1-minute low. I see that you had your stop loss somewhere right there, maybe somewhere right there. That's where I actually would have put my stop loss, somewhere above that week on the 5-minute chart, or at least above the budgets if I want to risk it so much. But yeah, I'm looking at this. This wasn't bad. Again, a little bit of an early partial. You are getting a really good entry, an entry at the break or at the low of all those levels right there. That's a really good entry. Really tight stop loss, which is amazing. But the same time, it's so early for a partial, right? It broke the daily level. It's going down finally with an increasing volume. So yeah, this is too early. This is good, not bad. Over partialing right here because you are seeing that the candle is going against you. But remember, this is only 1-minute candle, and remember what we said, candles, they usually trade within candles. You have one candle, it's pulling back a little bit, then it's working out and it's going down. The next candle, it's pulling back a little bit, then it's just going down, forming lower lows and lower highs. This is it's natural. It's normal to see a candle going against you within a previous candle, but that doesn't mean it's going to stop you out, right? And this is what happened right here. It just pulled back to the previous candle. Yes, it closed green, which was scary a little bit. It formed a new 1-minute high, which is also scary, but still no reason for you to bail, right? It's even below the 9 moving average in the 1-minute chart, which is the weakest moving average right there. You added right here. Let's see that add on the 5-minute chart. 5-minute open range breakdown, right? I'm not sure how far VWAP was, but I think VWAP was around 30 or 40 cents far, so we wouldn't have taken this 5-minute open range breakdown. I mean, looking at this, it's not so bad. It's forming a descending triangle. So yeah, it's not the worst right there. It's not an A+, but it's not the worst. Took it to the short side again, early partial, but at least at a daily level, and the rest is break even. So the risk to reward, you see, the risk to reward wasn't there for this 5-minute open range breakdown. You are taking it to the short side, and this is your target. It's just so small. And what's your stop loss? You are either putting your stop loss at the previous 5-minute candle, which is right here, or you are putting it at VWAP, which is above the 5-minute candle. So this is the risk, this is the reward. The setup was there. It was a 5-minute open range breakdown, and that's good. But the risk to reward wasn't there, which is why I would have just simply tried to avoid it and waited for a little bit more confirmation there. So your first trade was really good. The second trade was just a little bit late. Let's see what J-Bone did there. J-Bone traded BA. Setup, not a setup. I trade a double top. So J-Bone traded this for a double top. Double top? Was this? Yeah, it's a short for a double top. It's kind of triple top, a double top. Let's just call it. It's fine. Now let's see. Indicators, double top with a lower high at 10.15. 10.15, somewhere right here. So this is the first top, second top right here. Gapping down on the daily chart. So BA gap down. One thing in his favor, second thing in his favor. SPY was heading higher, but hitting the 200 moving average resistance. So he saw that the SPY was uptrending, but the SPY was hitting the 200 moving average. And if the SPY starts getting some resistance below the 200 moving average and starts dropping down, it might give BA some push to the downside. The entry was on a new 2-minute low. Let's see that. That's it. After this one, it's third candle, but it's not bad. Let's see that now. Stop placement 180.56. That was his stop loss right there. Intended for to 1 for the break of the low of the day, which is right here. Thought moving averages were doing sideways and acting as support to my position. Don't trade these steps if you don't have a playbook for it. So okay, now let's take a look at this one. First of all, it looked like a double top on the 1 minute chart, but look at the 5 minute chart. It was actually a double top. Yeah, sorry, I thought this one was a 5 minute chart. You had a double top on the 1 minute chart and you had a double top on the 5 minute chart, which is good. You had this double top right below a daily level, which is also a good sign. The entry, just in my opinion, was a little bit late. It was a new 2 minute low, but look at the 5 minute chart. You see it? You're getting in after a huge drop like that right here. It's just a little bit too late. I mean, if you entered at the low right there, it would have been good. You are having these selling pressure wicks on the top, which I like. Selling pressure right here, selling pressure right here, a reverse hammer or a shooting star right here, a dojo or a reverse hammer right there. So this right here, after all those candles, or this right here, would have been good entries. But now it already did a huge move right there. And looking at BA, just look at this. It's making this move right here, and then it's pulling back. Sort of a move, and then pulling back. A move, and then it's pulling back, right? Pull back, move. Let's just analyze this right there. You could see that in average, this is the biggest move it's making before making a pullback. Now this move right here, it's almost this move right here. So it was expected to have a pullback right there. This was a late entry right there. So yeah, just analyzing the previous price action, it would seem that this is the move you want to start taking partials at. So you are getting into the short side right at the lows. Right at the lows. If you took it to the short side right here, you would see that this was the move, this is the pullback, this is the move, this is the pullback, this is the move, and then you're taking it to the short side. Looking at that right there, at this right here, I mean, this is not so much, but it should be like that, yeah. At this right here, at this right here, you see that if you have this type of stop loss right here and you get in at the beginning of the move right there, you will have room to get some reward there. But getting in here, it was just a little bit late. It actually didn't get you stopped out, or maybe just get you stopped out to the penny, which is a little bit sad. But yeah, it never just got to the low of the day. Eventually it would have got you stopped out right there. But still, it's a good thing. You see that you don't need to actually trade all the setups there. You have your setups which are working for you. Avoid trading the setups which you are not really good at, but just keep an eye on them. DAL, and look at these guys. Just if you look at the price action right here on BA, on DAL, on the SPY, it just, I'm not sure about the SPY, but they are similar. You see these? They are all airlines. Strong move, red, white, red. Strong move, red, white, red, white, white. You see it? They are just simply doing the same thing. But let's see what you saw there. ABCD pattern, strong, nice, a strong move since the open. SPY going higher, increasing volume. Anti-pattern, you had the 200 moving average on the 5-minute chart right here, and that's a good thing. You see, this is something going on your way, preventing the setup from working out. 200 moving average on the 30-minute chart. Another strong resistance. 50 moving average on the 15-minute chart. Another strong resistance on your head. The entry was at the break of the high of the day. Stop placement $29, which is right here. Wanted to get to 2 to 1. You did not wait for a new low to exit right there. So look at this now. Those were indicators to get an entry at, but look at the 5-minute chart. Same thing, it just did a huge move right there. Yes, this is looking like a 3-bar setup right there, and it was a 3-bar setup, so it's not bad for getting into this setup. But if you are getting into a 3-bar setup, you definitely need to get some room, because 3-bar setup, in my opinion, it's sort of a chase setup. You are missing the first pop up. It's getting just a resting period of 5 minutes, and then it just pops up. With the 3-bar setup, I definitely need some confirmation on a smaller time frame. On 5-minute chart, it's good, but on the 1-minute chart, selling pressure right there, buying pressure right here, which is not bad. Trying to break up, doing an engulfing sandwich, coming back up. It's just a little bit toppy right there, and then you're getting into the long side. If this is your risk, you actually had it so tight right there. The $29. Yeah, the $29 wasn't the best technical level to have a stop loss at. This is a range, right? And you're getting inside the range. Maybe for the breakout, but still, like literally into the resistance area. You can't put a really tight stop loss there. Just give it some room right there. And if you give it some room, the risk to reward will not be there. That's why I guess you tightened your stop loss just to get some reward before it's hitting the resistance area. Then one more time you're getting into the long side there and you're getting stopped out at this area right here. So yeah, this was just a little bit late. On the 5-minute chart, it's showing you that this is extended. Like this is already a huge move there. Better wait for a pullback, which happened, then wait for a W shape. Like if you draw it right here, A, B, C, parabolic pullback, right? It's trying to go up, starting to drop down. So now it formed this double top, and now you want to see if this double top on the 5-minute chart going to work out and it's going to sell off, or it's going to hold and it's going to form the W shape on the 5-minute chart. You see it right here, double bottom or W shape on the 5-minute chart after a strong move on the 5-minute chart, ABCD pattern, 50% retracement, which is good, and then a new 5-minute high for an entry. You could wait a little bit, try it right here, but I personally wouldn't take it right here. Just a little bit tough getting after engulfing, but looking at this, that it tried to sell off one more time, then closed as a hammer and did a new 5-minute high, this would have been a perfect entry right there. On the 2-minute chart and the 1-minute chart, try to find some confirmation candles before you are getting an entry. Like here it was engulfings, and I don't love getting in after engulfings, waiting for a confirmation candle. When I see a setup on a bigger time frame, that's the confirmation candle right here on the 2-minute chart, and this would have been like the perfect entry on the 2-minute chart. But yeah, it will require a little bit of patience. It's a little bit tough, a little bit choppy, but the good thing is that you're managing your risk good. Yes, this is live, but not every day, only on Tuesdays and Thursdays. When you buy breakouts, do you wait after breakouts or just before? J-Bone, I get in before the breakout, but if I want to get into a breakout, I want to see good confirmation candles, so like curling above the 9 moving average in the 5-minute chart or below the 9 on the 5, which is my favorite pattern. Let's say you're having curling price action below the 9, you see that it's getting tighter and tighter in range, right? You're having sort of confirmation candle, or maybe you don't have it, but you see that it's trying to break out. It's getting tighter and tighter and tighter, and then it either just fails or it either just breaks down with volume. Looking at the indicators which I had, looking at the curling price action, looking at the gap, the direction it's moving on, where the resistance is, I will just decide if this breakout is worth taking, and then I get in before the breakout, for the breakout with the stop loss in new 1-minute low candle. Right here, it wasn't getting tighter and tighter. You see that the candles are big, right? So it could just simply chop within the 1-minute candle. Let's see where we had something similar. Something like, this is something I love for breakouts, so like this pattern right here. When I see that it's actually just starting to curl, this is not the perfect step. I need to see it holding some level, like particular setup level right there, and I see that it's getting tighter and tighter and tighter in range, and then it'll just get in before the breakout for the breakout and put my stop loss at a new 1-minute high. But I need to see that the breakout is going to happen, that it's ready for it. Here, these are huge candles, right? Yes, it's a breakout, and even if I waited for a breakout, I wouldn't take it because the candle is just simply huge. We can't put our stop loss within the 1-minute candle, right? Like here it's better. To be honest, this was a little bit early. This at least better because at least you're having confirmation candle. But still the range didn't get tighter. It was big, then it suddenly becomes small. It didn't do it steadily to get tighter and tighter before the breakout right there. Low, let's see what you did there. Okay, now this was again a risky play, but I see that it worked out for you. Usually wait for a new high at least for confirmation, right? Was there any wall right there? What made you take this thing to the long side right here, Lou? I took this trade and I took most of my position out at the 200 moving average. Oh, Ivan, it's yours? Oh, that was BA, and that Oh yeah, I'll get back to your trade, Ivan, right now. This was an accident? Was this winner an accident? Okay, I see that. Okay, it's good that it actually worked out for your favor. My accidents always cost me money. Never made money on accidents. Okay, so you wanted to place a stop limit order above a new 1 minute high so that you get filled once it breaks up and once it makes a new 1 minute high, just to get an early entry, right? I guess you did something wrong right there. Yeah, so you saw that it was starting to get ready. You knew that the pullback will happen at any moment. You felt that it might happen right here. You put your limit order right there, got filled a little bit earlier. Luckily, it worked out well. And I love your patience. It's good how much you held on to it. For a new 5 minute high, it eventually did go to the 9 and the 5, but you held on really nice to this one. Yeah, but still, good job. You held on to this trade and you had a plan for this one, but you got filled a little bit earlier. So still, yeah, it's good. Yeah, I hope that one day I'll make my own mistakes as well. Ivan, reverse ABCD pattern. Sadly, I partialed out too early as the stock ended up going all the way down to the 22s plus 2R. So you got 2R here, right, Ivan? This wasn't a bad reverse ABCD pattern. Stock dropped down, pulled back steadily, right? Into the 9 and the 5, rejected it, and then just simply dropped down. You see that it rejected it one time there, broke down the low of the day, got back into the range, which I don't really love, but still, this was a huge move. A pullback was expected. It did this pullback right there, held it. You see 2 hammers right here. Definitely not shorting it after those 2 hammers. Breaking out, fake breakout, and then it just drops down right there, which was your entry. I would have waited a little bit more just for confirmation, at least new 5 minute low, but still, right here you had enough indicators. Stock is weak, pulled back to the 9 on the 5, made 2 hammers with a fake breakout and get back down, which was your entry right there. Stop loss, you held on nicely, a little bit too much partials, right? But at least you got 2 Rs. If you are getting 2 Rs out of trade, that's really good. You could have definitely got much more than that, but yeah, 2 Rs is really good. Lou, I guess, yeah, your target was the 9 and the 5 if it was 15 cents more. I'm looking at it right here, somewhere around 45 right there. It was the 9 and the 5, I guess, but still, you held on nicely to this one. Good job. So we are actually right out of time. I'll share with you one trade I've done. I'll share the loser on the SPY. I'm not going through the winner because you know how I'm trading them, those parabolic reversals. Let me go through this one right here on the SPY. So look, the SPY was strong in the pre-market. When I see a stock which is so strong at the open, I look for a short play. I don't look for a long play. After I see a pullback, I come back to it and I start looking for a long play. SPY gapped up, so it was strong right there. It was strong at the open, pulled back at the open, right here. First new 5 minute high. I never take the first high after a parabolic pullback, and I usually wait for a W shape. Now look what happened right here. Drop down, came back up, started dropping down. It didn't do the W shape. If it did this, I would have taken it to the long side, but it made a new low. Now that I see that it's making a new low, I'm not taking it to the long side on the first leg up. I want to see a W shape before I take it to the long side, right? So look at it right here, and I am making a mistake. You see right here, no W shape. Stock is making to the upside with no pullbacks, and I'm chasing it to the long side. What did I do? I just decided to put my stop loss closer to this pivot point right here, assuming that it will form a W shape out of there. So yeah, I pre-entered it, and I broke my rules. I'm having rules, I'm having a lot of rules. Most of the time I'm following it, but still I'm breaking them sometimes, right? We all break our rules every now and then, and it costs us money. And to be honest, I would have re-entered right here. Like, this was my entry right here. Why is that? Dropping down, coming back up, dropping down, forming the W shape, closing as a hammer, and then making a new 5-minute high. This was my entry for this setup. If I take it to the long side here, put my stop loss a little bit right there, never using the wicks, right? Putting it right there, I would get stopped out right here. This would have been still a loser. So yes, this trade I've taken, it ended up to be a loser. And if I entered right here, this would have been a loser as well for me. But this feels bad. I wouldn't have felt bad if I lost right here. I feel bad that I lost right here. Why is that? Because I did break my rules. We all have our rules, and if we are losing money on breaking our rules, that's the sad thing, right? This was a chase entry right there. Just decided to put my stop loss right there randomly because I believe that this will hold right there. It ended up actually holding a little bit, but the setup didn't work. Try not to lose your bullets on setups which are not ready yet, right? Just be patient waiting for your setups. If you don't see it there, if you don't see anything ready yet, just take the morning off and come back in the afternoon. If you're not trading in the afternoon, just come back the next day, right? It's better to stay flat rather than ending up at your max loss or at a loss for the day. Amen. With mine, you said that it went back into the range. You didn't like that. Could you clarify? You're out of time, no problem. No, it's totally fine. I'll explain it right now. So the stock is trending, right? Pulling back, going up, pulling back, going up, pulling back, and going up. So look at this. When the stock is trending, I love to mark pivot point. That's the pivot point, the previous high. When I see that it's pulling back and it's not getting into the range, it's totally fine with me. It's going up and now it's dropping down. Look at this. Then it started consolidating right here in this area, right? You see? And then it's breaking it up. Now it's dropping down, but it's getting back into the range. Why don't I like to see a stock dropping back into the previous consolidation range right there? I don't like that because I'm afraid it will start forming a head and shoulder pattern. Like, look at this. This is going up, it's dropping down. It's breaking up the high of the day, which is good. Now it's dropping down into the range, and when I see that shoulder right here, head right here, it dropped down all the way down here, and now I won't take it to the long side because it's starting to form another setup, right? It's starting to form a head and shoulder setup. It could just simply go a little bit in my favor if I take it to the long side at the new high, and then just drop down, forming a head and shoulder, and then just sink back down. You see? If this is happening like this is not a head and shoulder. You could say that this is a shoulder and this is a head, but it's not a head if it's just simply continuing to go up higher, right? Like this right here, it will not be a head and shoulder step. This will be a double top setup or something like that. If it breaks up and it pulls back, it's still not head and shoulder. It's just simply forming a clear trend to the upside. If I see that the stock is uptrending and then it's getting back into the range and it starts to come back up, I don't like taking the first leg up. I wait for a W shape. Why do I wait for a W shape? Because now we're having shoulder, head, shoulder, and you see that here it tried to sell off, but the pattern didn't work out. It didn't sell off. It actually broke the shoulder, the high of the shoulder, which is indicating strength and indicating that it might actually continue uptrending there. So if I'm having a head and shoulder setup forming, I'm not taking it to the long side here, and if this just shoots up, I'm totally fine with it. I want to make sure that first this setup failed, and after that I'll get into the trade. So yeah, that's it, guys. If you have any questions, feel free to email me, guys, on YouTube. If you have any questions, also feel free to email me. I'll type my email right there. There was a question about CLDX, if it's being pumped. I'm not sure if it's being pumped. Maybe it had some news, it was going up. Looking at the volume, it's not a pump and dump. It's just a decent trading volume. If it was a pump and dump, you will have just 1 minute candle or 2 minute candles, like clearly increasing volume, and then it will just get back to the low down. So yeah, it's not that it's being pumped. And if it is it going back to 4 or no, I can't answer that question because I'm not an investor. We're just day traders. We're trading intraday. indicators, and we just try to make money out of those micro moves. I'm not investing, and I'm not good at swing trading either. So yeah, have a good day everyone, and talk to you in the chat room.